Hello everyone, welcome back to the channel. If you're new here, make sure you like, subscribe and share this video for more content on business, money and investing right here in Kenya. Today we are talking about the Nairobi Securities Exchange, also known as the NSE, and we are specifically looking at the top 10 best performing stocks in Kenya, and this will be really talking about the market trends, what companies have been doing in this particular period and in this year to be specific. So let's dive right in. Whether you are a beginner, a student, or just someone looking to get to know more about investing, this video is for you. A quick disclaimer: this is just for educational purposes and not a financial advice. So the first thing we're going to talk about is, what is the NSE? The Nairobi Securities Exchange is Kenya's main stock market. It allows companies to raise capital and gives investors an opportunity to own shares in the companies. So you might want to think about the NSE as a marketplace where buyers and sellers collude and they're able to transact. Whoever wants to sell shares of a particular company sells, and the one who wants to buy is able to find what he needs. So it's a marketplace where supply and demand meet and there is exchange of shares. So what are the factors that influence the performance of companies at the NSE? These are the factors that come in mind and that you should know of. One is company profits. The second is dividends. The third is economic conditions. And the fourth one is investor confidence. These greatly influence the shares, the price, and basically the whole environment of the NSE, which is the Nairobi Stock Exchange. The Nairobi Securities Exchange. Now let's look at the stocks that have shown tremendous performance, and this is in regards to the statistics that have been on in the websites and in the financial analysis in the recent past. And we're also going to look at the consistency of these companies, not just how much they've been trading for, but also how consistent have they been in their numbers. So we are going to do them in a list of 10 from 1 to 10. And just to start off is Safaricom PLC. So Safaricom is one of the biggest and most traded stocks in the Nairobi Securities Exchange. Its strength comes from things like M-Pesa, data bundles, and also the consistent revenues it has. Safaricom is among the most profitable companies we have in this country, and it has been consistently raking in revenues year after year. So it's something that has been going on. It's a trend, and it has a lot of investor confidence, and that's why you see it's doing really well. It's really popular among the new and long-term investors. So it's a long-term investment, if you get what I'm saying. It's a long-term investment because of the long-term revenues it has been doing and its consistency to put good revenues over time. The second one, we're going to Equity Group Holdings. This is among the biggest banks in the region, within East Africa and also in the whole continent. Equity Bank has grown into a regional finance powerhouse. Even its entry into the DRC really gave it that stature and that recognition in the region, in Africa in general. It it is emerging as a big player and a powerhouse in the banking sector. It performs well due to strong profits, innovation, and expansion across Africa. It's in very many countries in Africa, and the management is looking forward to even getting into newer markets and expanding further. So it's really doing well in the Nairobi Securities Exchange, and it's an investment I can recommend as me, not as a financial advisor. This, just to remind you guys that this is for educational purposes and not financial advice. The third company we're going to talk about, and that has been doing really well in the Nairobi Securities Exchange, is the KCB Group, the Kenya Commercial Bank. KCB is one of the largest banks in East Africa. Its performance is driven by corporate banking, government business, and regional operations. This is another company that has been consistent over the years, and it has a really good management. If you can be able to take some time and look at the financial data, or rather the company statistics, you'll get to know how the management runs the company and how ambitious they are. Recently, they've been acquiring a lot of fintechs. This is also including the Pesapal deal that they recently did. I think it was an acquisition. You can correct me in the comments if I'm wrong, but recently they've been engaging with a lot of fintechs, and it is a very promising move because that is the future of banking. That is where we are going to. So it gives a lot of investors confidence in the shares of the company and the revenue. It shows that the management has a growth mindset and is aware of the trends in the market. Hence, they are really doing good on the Nairobi Stock Exchange. The other company is the East African Breweries Limited, EABL. EABL benefits from strong brand recognition and steady consumer demand. It's known for paying dividends, making it attractive to long-term investors. Yeah, for those who have been investing and have been in this game for quite a while, they know how EABL has always been putting good numbers and really paying out dividends. It also has a steady profits year in, year out, and it is really an investment that I can vouch for, not as a professional, but it is a good investment. Anyone going into 2026 who wants to invest should definitely think about investing in EABL, and especially if you want to invest in the manufacturing sector, this is one to watch out for. Recently, there have been a lot of updates on the company, considering it wants to sell its beer category of its business, which has been the key driver of revenues and profits. So going forward, I'm not really sure about what is going to happen, but it will be interesting times to watch how it will play out, considering this move that they're about to make. And also, if you look at their assets and also their liabilities, which is their debt that they are currently servicing, I think it is very important that you also watch out. Just be keen. Don't really go as a blind investor. You need to be able to do your research, or rather find a brokerage firm that can be able to handle all of these things, or a financial analyst out there who can help you to go through all these things. So the other company is BAT Kenya. This is the British American Tobacco. BAT is considered a defensive stock. It has historically offered high dividend yields, making it popular with income-focused investors. So if you're one of those investors who really want dividends, those that really want to be able to cash in on the company's profits and the company's improvement, this is a company you want to invest in because they pay out dividends consistently. You can be sure you'll be getting the earnings, or rather the interest that you get on your investment, and it is one that has been doing well. Also, considering the defensive stock point, I think it's because it is one of those that they have really been consistent. They have a very good structured plan of how they handle the business and the company in general. So they don't have these ups and downs, these messy corporate governance that you see everywhere or in these other companies. Check out on this one as well. It can make you millions. Just joking. The next is the Cooperative Bank of Kenya. Coop Bank has shown strong growth due to its wide customer base, especially SACCOs and SMEs. It's known for stable profits. This is quite true, and I'm a witness to this because I bank with them frequently, and how they are able to approach the SMEs and the SACCOs is what really gives them an edge in the market. They are very friendly to their customers. It is one of those banks that, since I open an account, and this is not marketing, this is not a paid advertisement, it's the reality. It's what I have experienced personally. So it's one of those companies that I trust a lot, and I've not yet bought their shares, but I'm really willing. I have this soft spot for Coop Bank because of how they govern themselves. You can tell there is some sense of discipline, some sense of corporate governance and direction and a clear plan. So it is one of those companies that you can be sure you'll be able to reap your rewards and also get your profits. Hence, they're doing good numbers in the Nairobi Securities Exchange. Also, the stable profits, I think this is just linked to the first point of the good governance they have. The other company is the NCBA Group. NCBA stands out for its digital banking model and mobile loans. Its tech-driven approach has helped boost performance. I think this is a company that has also been doing quite well. This bank has introduced a lot of fintechs. I think Loop, it's one of its subsidiaries. Correct me if I'm wrong, I'm not really sure about it, but they really watch for the tech side of banking. Hence, I think why they invested in the Loop fintech and the whole ecosystem. Even the approach to the approach to be able to bring in the young generation, especially the Gen Zs, is something that I think is an edge for them, and it gives them that motivation, and it gives a view that they're a company really looking forward, and they know that the young generation is a very big sector and can be a very big customer base for them. Hence their drive in pushing for the young people to open accounts and to register with them. This is evident even with their campaign across most Kenyan universities. I'm not really sure if they are in the East African market in general, but it's one of those banks that you need to look at their stocks and what numbers they're pushing. The other one is Stanbic Holdings. Yes, another bank. Stanbic benefits from corporate and investment banking services. It is also known for consistent dividend payouts. I don't know if you've noticed, but paying out dividends really help a lot these companies. Most of these companies pay out their dividends consistently, and the Kenyan market really loves dividends. It promotes and it just congratulates dividends, hence why they do well, the companies that consistently do this. I'm not really quite well familiar with Stanbic, but over the period which I've been researching and across the articles I've seen, I think it's quite a good bank, and hence the corporate and investment banking services doing quite well. So yeah, you can invest in that one as well. The other one is Bamburi Cement. Yeah, this is quite something to talk about. Bamburi's performance is tied to construction and infrastructure growth. It has remained strong during periods of increased development activity. This is a company we need to discuss a little bit further and deeper about, because I remember back then when they had started talking about selling some shares to Tanzania billionaire and tycoon. Their shares skyrocketed. It went from around 40 something Kenya shillings per share to almost a staggering 82 Kenya shillings per share. That is 100%. So it is one of those companies that you want to be keen on. It has a very great potential because also we are consistently growing. We are consistently, and just will keep growing, we'll keep building as a nation. And why Bamburi Cement is key is because their market share is quite big, so they really take a huge part in this development and infrastructure growth in the country. Hence, you can be sure of it. Yeah, place your bet on them. The other company is the Diamond Trust Bank, DTB. So DTB focuses on trade finance and regional banking. Its disciplined lending has supported stable performance. I'm not really also really quite familiar with this bank, because not only have I not banked with them, I think it's one of those private banks that are really coming up aggressively, and they're growing at a very fast pace. So it's one to check out on, and it's a company that has a good management that is also growth oriented. They're really expanding quite fast, and especially in Kenya they're doing quite well. A bank that has a good lending history is a bank that I can vouch for, because a lot of banks don't have that. So why these stocks perform well? Let's dig deep on these. These companies tend to perform well because they have strong fundamentals. They operate in essential sectors like banking, telecoms, and consumer goods. Many pay regular dividends. Like I said, the Kenyan market love dividends. So yeah, that's something you should note. They have strong management and regional presence. Most of these companies are not just in Kenya, but they are in various markets in the East African region, and also to some extent in the south and central part of the continent. So they are big entities that command really huge profits and revenues. So a final thought, or in summary, the Nairobi Securities Exchange offers good profit and opportunities, but investing requires patience and research. You need to do your research, you need to do your homework, and just be patient, because it's not a get quick rich scheme. Always understand a company before buying its shares, and invest according to your goals. If you enjoyed this video, make sure you like, subscribe, and leave a comment. Let me know which NSE stock you're interested in or you've already invested in. Thanks for watching, and I'll see you in the next one.